It sounds that way, doesn't it?
Can I just say one thing? Microsoft is a fabulous company. I don't think anybody on the desk would say that there's anything wrong with the company itself. But even the best companies go through periods of time that are just not a great environment for what they do. And Microsoft is no different than any other enterprise/consumer technology company. The pandemic basically pulled 3 years worth of demand into 10 months. And ever since, like literally going back to February of 2021, every company in this industry has been working off that pull forward, and the fundamentals don't have to completely deteriorate in order for that multiple to come down lower. International Data Corp said PC shipments in the December quarter probably down something like 30%. Microsoft, so Microsoft, as great as it is going to be susceptible to that environment, and there's nothing, no evidence telling any of us that environment is changing materially into Q1, and in fact, the risk is probably to the downside. So
I think it's a good point.
Nothing wrong with Microsoft, plenty wrong with the environment in which it has to operate in, at least in the first half of this year.
Sold it, what, a week ago or so?
Yeah, well, I traded it.
And you traded for that jacket?
I understand your aversion to fashion, Jim. I understand it. But here's what I'd say. First of all, I'm surprised you're saying that Tesla would have more of an impact on the market than Microsoft. Tesla's more in a niche category. When I take a look at Netflix and the impact that it had in the market by putting up such a good quarter, which kicked off this rally last week and continued into this week, I'd say that Microsoft has more potential for knock-on effects, either positive or negative, to the market than Tesla for sure, and even Boeing, which again is a niche business. In fact, while Boeing was going down dramatically, the market continued to rise. So I think you're wrong about those.
I don't know. I feel like Jim's point is let's try and distill it a little bit more, because I feel like you can make a case for what he's saying by virtue of Tesla was like at $100.
That's my point.
It's $140.
Right.
And all of those stocks in that same sort of ARC universe, if you want to put them in there, have rallied so dramatically that maybe it does have a greater impact to the market right now because of the stocks that have gotten you to where we are today anyway.
But except Microsoft has, while it's come down quite a bit, it's also bounced off the lows quite nicely.
It has, but it's been the worst performer of the big tech stocks year to date.
Right.
When everything else has rallied, Microsoft's done nothing. It's up 1%.
Right. But it's
didn't
still
go down as much
versus like the security stocks.
Went down a lot, though.
Like, we look at the security stocks. We'll talk about them later. But in terms of Microsoft, I agree with Josh that, look, things have not gotten better there. In fact, they've gotten worse. They've telegraphed that for you.
They have.
As has AWS, not only by the obvious of the headcount cuts, but by the fact now they were entering into deals, whether it's with the state of Virginia or whatever, to deploy substantial amounts of capital, which I can guarantee you then turn to guarantees on contracts. So I think you got to be very cautious.
Okay, so you've heard what the group thinks here. What do you think?
Well, so first of all, Microsoft already kind of prepared us for them to miss, right? They prepared us for not really a great message, going to lay off 10,000 people by the third quarter. I don't think anybody's expecting much from big tech earnings this quarter, and the market is ready for that. It's no secret that tech is under pressure. It's no secret that tech needs to cut costs, and the criticism for most of tech has been that they don't know how to cut costs, and they're not doing it fast enough. I think Microsoft has gotten ahead of that a little bit. The big thing that I think investors need to think about, and yesterday was a pivotal day, and I think there was a headline today that got buried in this volatility halt this morning, 3M laying people off too.
Oh, we're going to get to that. We're going to get to that.
The fact that it's bleeding into other sectors now is the canary in the coal mine. And what I think investors really need to focus on is if you're going to be a bull on parade because of a 30-point breakthrough in the S&P that lasted one day, it's like you brought a Toyota Camry to the Indy 500, right? There's not enough weight of the evidence to be a bull in this environment and decide that this can last because the fundamentals of the economy haven't changed. There are a ton of signals screaming recession or at least screaming downturn, and to be cautious as an investor. So I just would be careful to look at some of these rallies, even if they last 2 to 3 weeks. Be careful to look at them as a signal that things are okay.